What's going on, guys? It's Henry. I'm back with the video, and today we're going to talk about strategies that you can use in a volatile market. So obviously the market is going completely bonkers. I mean, we're down 2%. Yesterday, I told everyone to basically hold long-term dollar cost average. We ended up pulling up and actually closing flat. But again, we see a negative 2% on the S&P 500 for today. So what I want to do today is actually not only betting on volatility, but also betting on earnings at the same time. So I believe the market is going to recover fast, like a V-shape or a U-shaped recovery, or this may be a market where we see further sustained selling. Either way, I'm going to show you buying an iron condor, what factors I'm going to look for, and which specific stocks here I'm going to pick. So I'm going to pick between 3 or 4 different stocks and show you how I'm going to think about opening potential iron condors. So the first thing that I do want to look at is probably Tesla. That sticks out the most to me. However, I'm probably going to look at Apple, potentially Robinhood. That's 3 different stocks. Trying to find stocks that I think will have big moves. Obviously, Verizon's not going to have a big move. Microsoft would be a 4th play. Now, maybe looking at a 5th play, potentially Visa, MasterCard, but we'll take it from there. Let's start off with Tesla. All right, so I'm going to pull up Tesla right now. I have a whole lot of shares of Tesla. Obviously, I'm a big bull in the stock. I felt very queasy yesterday when it went down below $900, but I said that would be a great buying point. I made a 2-minute video. If you want to check it out, it'll be in the description. But essentially, Tesla below $900 per share to me feels like a steal. Also, Tesla has earnings in 1 day. Now, what I'm going to do is click trade Tesla options right now, and we're going to open up an iron condor. The benefit of an iron condor is you can actually make money if a stock goes up or down. So either way, if a stock has a big move, which basically due to implied volatility right now, due to the market having a lot of volatility, this could be a good strategy because Tesla is either going to go back to the thousands or it's likely to go below 900, but it's unlikely to stay the same. Now, adding on top of market volatility and uncertainty right now, Tesla also has earnings. So historically, when a stock reports earnings, the stock has a greater than average move either to the upside or to the downside, depending if the earnings are positive or negative. So I'm going to show you guys what I'm going to do right now. Tesla's around $913 per share. And I said we're either gonna go past $1,000 per share or we're gonna go below $850 per share. I'm hoping that we go up to the upside. However, you never know in this type of market. What I'm going to do is I'm going to scroll up and I'm going to buy a call option. Now, the reason why I'm buying this call option is because, again, I expect Tesla to either go above 1,000 or below 850. So a good strike price might be something like the 945. What I'm going to do is actually open up the iron condor. If it doesn't look good to me, if the risk reward doesn't look good, then I can always adjust these strike prices. So I'm going to start off by buying the 945, and then I'm going to click sell call option. So now I bought one call option. To open up an iron condor, I'm basically protecting myself here by buying a call option, selling a call option, okay? And then the same thing will happen for buying a put option, selling a put option. So I bought the 945 call option. Now I'm going to sell the 955 call option and significantly reduce the cost right here. So the cost is not going to be 34. That's a crazy amount, right? That's $3,400. Instead, I'm going to sell the 955 call option right now. And you can see that the total cost right here is very, very low. I mean, very affordable, $380 per share. Now my break-even price here is going to be about $948. However, again, I'm not sure if it's going to go up or down. There's really no way of predicting. So what I'm doing is I'm going to now buy put options. And I said that this stock could be below $850 per share. Again, I'm a bull on this stock, but I'm just showing you an example, not a financial advisor, just giving you the education and the tools that you can use, go out there and make money for yourself on this stock or other stocks for yourself, given your perspective. So now I'm going to open up and go buy a put at the 865 level. I'm just picking arbitrary strike prices. And now I actually just realized not going to open up the 865 because very, very important. You need the difference in strike prices to be 10. Here I picked a difference of 10, which is $1,000. And if I pick the 865, well, I actually can't make a $1,000 spread. So instead, I'm going to pick the 860. Caught myself right there, okay? This is a big mistake that some people make. They open up uneven iron condors and things get really confusing. Just keep it simple. If you've opened up a $1,000 call credit spread, now you can open up a $1,000 put credit spread. Again, combining a call credit spread and a put credit spread, that's what an iron condor is. In this case, since we're actually buying an iron condor, we're actually buying debit call spreads and debit put spreads. So what that means is I'm just buying the closer to the money strike price. So this is 850. I'm going to buy the 850 put, okay? So buying the 850 put. Now again, I'm going to sell to protect myself to actually open up a spread. Otherwise, if I just sell this 850 put, you can see it on the chart right here. This is really nothing. This is not an iron condor yet. To create the iron condor, now I have to sell this 840 put to create the iron condor. Now you will see right here that we have gains on both sides. If Tesla falls to the downside, we have a gain. And if Tesla rises to the upside, we also have a gain. Now this strategy right here has a max loss of $668 for a max profit of around $300. So the total return here is about 50% because the total amount of money that you can make is $1,000. You're risking $667 essentially. Half of 667 is about $333. And then of course, $333 plus 667 is $1,000. So you can make a 50% return on this iron condor in 1 week. However, you need Tesla to fall below $843, which again, I said is possible if they report really bad earnings, or what I think will happen if Tesla reports really good earnings and it ends up rising beyond $951 per share, then you're going to realize a profit. So I think it'll be around this area right here. However, if you're unsure, I'm showing you this strategy because you can make money on both sides, whether a stock falls or whether a stock goes up. Now, I do want to show you guys other examples, not just on Tesla. Let's move over and go to Robinhood. So I'm going to look up Hood on Robinhood. Pretty funny. This stock is either going to blow up or blow up one way or another. It's either going to rise or fall. The reason for that is if I go to maybe like the 1 month chart, this stock is down 30%. So this stock has gapped down a whole lot. We have seen a whole lot of selling pressure. However, it's not going to take much if they report a good earnings number for this stock to rise potentially past $15 per share. Or if this stock reports some bad numbers, then I think the stock can be below $10 per share. Again, they are reporting earnings tomorrow. 1 day is left. And there's a whole lot of people that are actually asking questions. This is pretty interesting because I think for Tesla, there was 4,000 questions asked, and for Robinhood, there's 2,100 questions asked. So let's go to trade Robinhood options, and I'm going to do the same thing again. I'm going to go ahead and buy a call option. Now, I'm going to go much closer to the money. Thing is with Robinhood is this stock is a cheap stock. So this is going to be a good play for people with small portfolios because it's not going to require much money for you to see a benefit or for you to actually take a position in the iron condor. So what I'm going to do is I'm actually going to buy an at the money call option. I'm going to buy the 13 call option, and then I'm going to go a little bit quicker and sell the 14 call option right here. Now, you guys know the next step is to buy a put option. I'm going to buy a put option at the 13 strike, which is again an at the money option. I'm really betting that Robinhood is going to have a move from the 13 level, from the current level right here. This is a little bit different than Tesla. For Tesla, I went a little bit out of the money because Tesla has a lot of volatility. It's also a much larger stock, so we can move a whole lot more. However, for Robinhood, it's a $13 stock and the strike prices are very thin. They're very close together. They're only $50 apart, whereas with Tesla, they were $500 apart. So for Robinhood, I can go much closer to the money because these strike prices are not changing very much. So I bought the 13 strike put right here. Now I'm going to sell the put for the $12 level. Again, I'm going $100 out of the money because that's what I did for the call side, and I want to do the same for the put side. Now you can see that the total cost is $88. However, we can only make $12 per share. That's because our break evens are so close. Robinhood only has to pull up above about $14 per share to see a full profit and below about $12 per share to see a full profit. Now this position will start to see profit below $12.12 and above $13.87. Now the risk reward here isn't fantastic, so I want to show you an alternative because you're only making $12 and risking $88. And for some people, they're like, wait a second, that doesn't really make any sense. I think Robinhood is going to move a whole lot more, and I want my reward to be much larger compared to my risk. And I do agree with that because 12 divided by 88 is about 15%, whereas the Tesla Iron Condor had about 50%. So something's up here. We're going to have to change the strike prices. So I'm going to go a little bit farther out of the money, go for buying the 14.5 call option. Now I'm going to sell a call option at 15. I want to show you guys what it looks like to make a $50 spread, or essentially a $50 iron condor. So buying the 14.5 call option, I'm going to now sell the $15 call option, go to buy put, I'm going to buy the 12, but now what I notice here is I can't really do that. Now the reason why I can't really do that is because Robinhood no longer has 0.5 differences on the downside. So the only thing I can really do here is buy a 12.5 put option and then sell a 12 put option. Now you'll notice that my total cost is $34, but my max profit is $16. This iron condor now is about a 50% return. It's actually slightly higher than 50%, very similar to Tesla. However, what you will notice here with this iron condor is we are much closer to the downside. This would be the middle point for Robinhood. However, it's much closer to the downside. So this is a slightly bearish strategy. However, it's still betting on huge volatility for Robinhood either falling a lot or rising a lot. And given Robinhood's negative momentum, I do believe that this stock has a higher chance of falling. So I am a fan of this iron condor right here. Now, the next stock that I want to look at is going to be Apple. So Apple has had a lot of high momentum going upwards, but obviously Apple has sold off a lot during this market correction. So let's open up Apple. Apple is one of the best options to trade for any strategy out there. Now, the reason for that is because Apple's options have so much volume. A good amount of volume means that your bid-ask spreads are going to be very tight. They're going to be awesome for traders because you don't have a very high cost of trading. Even though Robinhood is a free platform, every time you do trade options, there is some implicit cost due to bid-ask spread. However, it's very low with Apple because Apple has some of the highest volume in the entire stock market. Now, Apple has sold off a lot, but it was a $179 and even $180 stock. If I zoom out to the 1 year, I do want to point out that this stock was also trading for $143. There's a whole lot of things that can happen to Apple given this market and given earnings. I'm going to go ahead and again buy a call option for something close to the money, such as the 165 level. Now I'm going to sell the 170 level. And again, I'm going to go buy put option. This is the third time I'm doing this, so you guys should start getting the gist here. And again, I said that Apple was down to about $143 not too long ago. So I'm going to go ahead and buy the $150 put option. Now I'm going to sell the 145. Things get a little bit funky because these strikes are starting to move by $1. However, it's pretty easy. I'm just going to go down to the $145 level and end up selling this put option right here. Now, my total cost is $172. However, I can actually make $327 right here. This option position right here can actually give you a 3x on your money because you're risking $175 right here, but you have a potential reward of about $500. That's about a 3x return. And as you can see, you need Apple to go up to $166 per share, or you need to go below $148 per share to start seeing a gain on this iron condor position. Now, the last stock that I'm going to look at is Microsoft. Microsoft is very interesting because it had a lot of stability, and even though the market is correcting, this stock is staying pretty stable. I mean, it was up 10%, now it's down 7%. So that is about a 17% move in about a month. So this stock still has very high implied volatility, which means it's going to be a good candidate for an iron condor again. Now, what I'm going to do is I'm going to pick something close to the money. I believe that Microsoft isn't going to move as much as something like Apple or Tesla. However, I still think there is money to be made, especially if you go close to the money. So 290, I'm going to sell the 295. Now I'm going to buy a put option and I'm going to go down to about 280. And now I'm going to close off this trade by selling the 275. Taking a look here, our total cost is $383 per share and our max profit is $117. What you will notice here is that our risk is pretty high and our reward is fairly low. The reason for that is because I went so close to the money. If you want to expand the amount of profit that you can make and reduce the amount of loss, then what you want to do is go farther out of the money. So picking something like the 270, 265, or on the call side, maybe you even want to go up as high as 300. So instead of 290, 295, you can go 300, 305. Your max profit will be much higher. Your max loss will be much lower. However, keep into consideration that the reason why the max profit is higher and the max loss is lower is because you need the stock to move a lot more for you to break even. With this trade right here, you only need Microsoft to go to $293. However, if you go higher, then you're going to need Microsoft to go up to $300, maybe $302 on the call side, and lower than $275 on the downside. You're going to need it to go down to $270, $265. As you can see, the bigger that you make your profit, the more the stock has to move because option traders understand that they're giving up some risk for reward and vice versa. So if you want a bigger reward, they want the buyer of the iron condor to take on more risk, whether that's a max loss risk or whether that's an implied volatility risk. So something that we're not seeing here is implied volatility, or the potential move that the stock has to make for you to break even on your iron condor. So the further you go out of the money, the more you need the stock to move, and the less likely that is to happen. If you guys want to see all the trades that I'm making live and how I'm outperforming the market, protecting my portfolio, and hedging my portfolio while this market continues to be shaky, then the Discord community where I go live Mondays and Wednesdays along with all my buy-sell signals could be a good fit for you. Make sure that you submit an application in the link in the description. Thank you for watching. Stay aggressive in learning, but be very safe in investing.